Hey guys, in this video we will have a look at the Salesforce stock using this Nordic Graphs tool. This tool visualizes the valuation of the stock and does calculate the rate of return for our investment. The last All-In podcast, episode 270, had a real interesting discussion on the Salesforce stock, and Sachs was pointing out at the end of the discussion that Benioff is having a good chance of going to make AI work to his benefit, and the stock might be a bargain right now. I'll link down below in the description to the podcast episode and to the correct spot where that discussion starts. Going back to the tool, Nordic Graphs, we can see here that the black line, which is the stock price, has been trading above the orange line and above the blue line for quite a bit. But then when the earnings per share have been growing, the valuation has gone down below the normal PE ratio and kind of reaching even this fair value line of 20, which I have set here. You could argue that using the Peter Lynch formula of growth equals PE, we could set the PE even higher, like to 37, and it would be clearly down below that line. But even being conservative and setting the PE at this value of 20, we get a nice return of 24% if we are holding to the end of this 4-year forecast period. If we shorten that to 3 years, which I usually like to use, we would have a return of 29%. And this is 29% per year. So we can see a buy at 178 and sell at 350, so that's pretty much a doubling of the price. Of course, this is assuming that the analyst estimates, which we can see here on the earnings per share line, would be accurate, and we can see nice growth here in the forecasted estimates. We can also shorten the period to visualize this maybe a bit easier, and we can also see that the growth rate, since it's calculating that based on the start and the end of this period, it drops down to 28%, so we could still argue a fair value PE of 28. But there is of course risk involved in Salesforce as well. All the SaaS stocks have gone down, and the risk which is seen that with AI coming, customers would need less seats for the SaaS software, and that would drop the revenue. We can also remove the normal PE line to use a bit more of the graph area, and we can see that the stock has come down from highs like $360 down to the current $178. It was as low as $164, so it's quite attractive at these prices, assuming the analyst estimates are correct. I can currently see that there are 56 analysts covering the stock, and 42 of them have a buy rating, 13 hold, and 1 sell rating, and the average target price is $261, and even the lowest target price is at $190, so higher than the current stock price. Here's a summary of the All-In podcast discussion on SaaS and Salesforce, or kind of mainly focusing on Salesforce, but Sachs was pointing out that it's unbelievable that the free cash flow compared to the enterprise value and category leading SaaS companies that used to trade at 13 times annual rate of returns are now trading at 3x or ARR, and Salesforce is also a founder-led company, so there's quite a bit of praise for Mark Benioff, who is the founder and still leading the company, and also praising the Headless product announcement which they made just recently as a smart move, comparing to, for example, Workday's approach, where Workday wants to charge AI agent toll for using the platform with AI. And this kind of relates to the seat discussion that since you use it as a headless product, so essentially you are using it via an AI agent. You don't need that many seats, but Workday is kind of trying to prevent this. But Benioff with Salesforce is kind of doing the opposite and providing access for using their product. So Salesforce is willing to reinvent the business and burn the boat, so there's no going back. So they are taking a huge risk, but they are also reinventing the approach on how to do business with the changes that AI is bringing. And they are also saying that Benioff has been able to navigate the previous tech wave, social, mobile, big data, and may be able to do the same with AI. And there's also some bear case arguments. The broader concern enterprises are replacing per seat SaaS licenses with internally built AI agents, breaking the predictable cash flow model that SaaS valuations depend on. The overall take is that cautiously bullish on Salesforce, specifically due to Benioff's leadership and Headless strategy, varies on legacy SaaS broadly. And that Salesforce discussion starts around 27:02 in the video, so I'll leave a link down below in the description to that. None of the information on this video is investment advice, but if you're interested in investing in SaaS companies and taking advantage of the dip which has occurred, Salesforce might be a company to look into more deeper and doing your own research. I definitely am going to look into it more, and I might also invest myself. If you found this video interesting or helpful, please give the video a thumbs up. Thanks for watching.